Hi, this is Dan Collins joining you live from the Las Vegas Traders Expo. Joining me is John Person, a longtime mentor and trading educator here. John's going to talk a little bit about the numerous indicators he teaches and uses in his trading.
Well, Dan, there's different indicators, as you know. Gosh, we go back at least 20 years.
A long time.
Yes, a long time. I think one of the things that people don't know is there's never one shoe-fits-all type of indicator. Of course, we have different unique tools to help understand the health of a market, and especially a trend. Volume is always crucial, but I think because of the increase in use of options and also with ETFs, volume histogram study has been less efficient, and Joe Granville's tool using on-balance volume is something I've been using for over 30 years, and at this show we've done a lot of work through the years in helping investors utilize OBV, on-balance volume, to give clues as to the strength of a trend up and down. So volume's very important. Another tool when it comes to individual stock indices, people don't realize that with capitalized weighted stocks that give more preference to the value of an index, it's the concept of the more the merrier comes to play. So if more stocks are going up but the indices are going down, the advances are outpacing decliners, that actually is a healthier undertone in the market, which is interesting because the advanced decline trend now in the S&Ps, as we just concluded, we're closer to lows of the year, and everyone's thinking there's more damage coming to the downside. And some of the work that I'm using volume and advanced decline is suggesting that the market's not as bad as it could be in this condition, using those that breadth and a market analysis.
Yeah, the most advanced decline line, it's always been a long time indicator for some people. But I'm going to ask you about the other side of it, because often traders take 2, 3, 4 indicators and use them together as, one is their trade signal and there may be two that can confirm it.
Right, yes.
However, we're here at the Las Vegas Traders Expo, and people have a lot of things. And people as old as us know that there's no one perfect indicator. As old as me say that. I've interviewed 200 managers who make money, and I learned that they do it in different ways. So there is no holy grail. But if you go to a show like this and you can see a half dozen people looking at different things, you can get yourself into a period of what they call paralysis by analysis. How many do you look? Is too many? In a case of some being too many, and you have to get a system and then stick to it?
Yeah, so if I'm looking at index trading, Qs, the NASDAQ 100 versus the S&P, the diamonds, the Russell, I'm looking for I use the advanced decline, and what we did is we created advanced decline for each individual stock index. So instead of using the advanced decline on the NYSE or the TIC or the ARMS index, we have broken down the advanced decline on each respective individual stock index. So I use that. I use volume. I have a momentum trigger mechanism, the PPS indicator. Many people are familiar with that on Thinkorswim and other platforms that we created that. So there's specific indicators that are designed for specific things. So with commodities, we have a tool that's least used by the masses. It's open interest. And so there are other tools that we have, and I think triggers and understanding a condition of a market, there's different tools for that.
All right, well, thanks, John. We're going to take a little break here, and then we're going to come back with John, who's going to talk a little bit about volatility and some new things he's working on. Live from the Las Vegas Traders Expo.